No fees and charges are expected to be carried over to customers as new regulations are being adopted by the Eastern Caribbean Currency Union. GBN saw the expertise of President of the Grenada Bankers Association, Richard Duncan, who says it will be a combination of Basel II and III that the central bank has deemed appropriate for the region. Basel I has been the standard of framework banks have been using since the 1980s.
Intuitively, I do not see it as a onerous cost exercise that will result in any passing on of that cost in the form of fees to customers of the various banks.
However, Duncan adds, it is not yet clear to member banks the full financial or cost implications of implementing Basel II and III. Stronger, stable and better operated banks as well as banking and financial systems are the targeted outcomes of the new regulatory framework. Local banks will be expected to be more clinical in handling their balance sheets, increase their capital by asking existing shareholders to invest more or invite new investors, or pay less dividends while keeping more profits. The president of the Grenada Bankers Association says this means that banks will have to boost capital or shareholdings in relation to its assets and operational risk in regard to the size, structure and dynamics of the bank.
Well, I think the two biggest benefits are, first of all, customers and, as we like to say, the market as a whole can rest more comfortably and be assured that banks that become compliant with Basel II, III have adequate capital for the risk that they are going to be undertaking, because another component of Basel II, III obviously would be a measure of enhanced supervision by the regulator also. So people can rest, assured. People come and they put the money in banks, they go home, they rest very comfortably and so on, not worrying about the possibility of a loss. That's for the regulator to worry about.
Duncan impresses that market discipline is another of the major benefits, with investors, shareholders as well as the public being more knowledgeable on the bank's performance and quality of assets.
I think the second one is the fact that banks are required now to publish certain information and disclose to the public. So those who have an interest in such information to give them insights into the strength and stability of any financial institution will have such information really available to them and on a timely basis. So I think those are the two biggest benefits coming out of Basel II, III from the standpoint of the customers. And of course, the banks themselves, I think every bank pride themselves in being stable and being strong, and that helps them to compete on a strong footing with their peers.
Components of Basel II are expected to be implemented at the end of December 2021. I am Gerard Joseph for GBN News.